YouTube, welcome back to a brand new inter-equity trading video. Got the new intro, new vibes. Today is gonna be a banger video. It's gonna be on a specific model I trade on a daily basis. It'll provide you your direction, your entry, your targets. Everything will be super straightforward, but very, very powerful. So pay attention. Enjoy today's video. If you guys do, please leave a like and a comment down below. It helps us out. And then also it helps me want to make more and more videos for you guys, knowing you enjoy it. Turn those notifications on for future content and let's get right into the video. All right, so first, before we hop into any charts, we're going to talk about the model itself and use diagrams. You can see here I've drawn on a little custom bullish candle, gray candle here. Again, just to easily understand the model, the foundations of the model first, before we head into some charts and look at some actual live price action. All right, so in front of us here, we have a candle. As we all know, this would be the open. If this is a bullish candle, this would be the close, and then we have the high and low. So what we can do, just to make sure this is as easy as possible for everybody to understand, let's mark this all out real quick. All right, so here we have the open of the candle. All right, so here we go. I've marked it all out just so we don't waste some time here. We got the open of the candle. We got the close of the candle. And here is the low of whatever time frame this represents. Okay, and this is the high. In this specific example for the model I'm going to be showing you guys, we're going to be talking about the 6 a.m. to 10 a.m. H4 candle. The importance behind this candle. Typically, I am trading only New York session. Very important. I am typically only ever trading New York session, and that's why this model is so important. Okay, as you guys can see, this candle opens at 6 a.m., closes at 10 a.m. Now, 10 a.m. is a very, very powerful time, especially in the futures market, because again, that's when a new 4-hour candle opens, and this one, the current one in front of us right now, will close. How do we use this to our advantage? If we are bullish, and this is what I'm going to be talking about in this example, a bullish setup, a bullish scenario. This candle closes at 10 a.m. Okay, we understand that. Now, if I want to go long, I will look for longs below the previous 4-hour low. Very, very important. This right here will actually help you avoid many losses in the market. Okay, so again, 10 a.m., the new 4-hour candle opens up. We want to look for longs below the previous 4-hour low. So what we can do here, okay, so now I've drawn on the next candle. Again, this is the candle you guys want to be focusing on for this model specifically. This is the candle we are going to be trading essentially. So look what I said here before. 10 a.m., this candle closes. Candle number 1, we can call it. Once we trade below previous 4-hour low, this is when you want to start looking for longs. Longs back up to the upside. Again, around the time of 10 a.m. Very, very important. That's what I need you guys to understand here. We are not longing until that low is taken out. Once the low is taken out, longs are active. So it's a very strict rule for this model. Again, we're longing below the low. Once price stabs it, longs are active. Okay, so now that you guys understand that, it's actually not too complex. Again, I just need to make sure that foundation is there for you guys first. Now we can go into some actual charts. And actually, okay, we're going to be on TradeZella, guys, to finish off this video, finish off this breakdown to emulate live time as much as possible. Right now, we are currently sitting at the time of 9:25, okay? So right before stock open, what I'm going to do is skip over to just before the 4-hour candle closes. If I hop into the 4-hour right now, we can see at the top, look at the clock here right now, 9:55. So we got 5 minutes until the next 4-hour candle opens. The current 4-hour high and low is right here. We got the low set here. We're going to change this to black just to make this as clean as possible. And we have the low here and the high here. Okay, so what we can do is we can actually just mark this onto. All right, so now that we've got that marked out, we have the current H4 high, current H4 low marked out straightforward. Okay, again, in 5 minutes, we are going to have a brand new 4-hour candle open up. And again, in this scenario, we're going to focus on bullish. Okay, we are going to be bullish for this scenario. So if we can make sense quickly of the bias, I'll show you guys. We can see how price has tapped into this high on the left-hand side. We can mark this out. Okay, just like this, price tapped into it once, twice, and that fueled this sell-off to the downside from high all the way to low. We are going to be looking for buys back up. And why is that? We have swept internal liquidity. My eyes automatically go all the way back up to these highs here. Okay, 21,806. Now let's open this up on the lower time frames a bit just to make more and more sense of what's going on. Don't forget about the current model, okay? The specific time we are looking to take entries at. Again, H4 high, current H4 low. How can we enter the market? So once the 4-hour candle closes up, you can see now it's 10 a.m. on the nose. And boom. So this is what the current 4-hour candle looks like, just to make more sense for you guys. There you go. So the old one, the low, and the high. We are now running that H4 low. Remember what we talked about at the beginning of this video. Once we trade below that 4-hour low, longs are now active. Now we're not just going to press buy, okay, and just start hammering buys and there's no stop losses. No, there's no logic. There's no professionalism in that. We need to make sure there's actually a proper entry. This is providing us the time to take entries, which is debatably even more important. Back to the lower time frames we had. What can we see on the left-hand side over here? Price has left a liquidity block for us. Okay, and I can mark it all out just like this. Perfect. Now, just to show you guys on the lower time frames what it looks like, because sometimes it's hard to identify on the time frames higher. We have price inducing buyers. Okay, you know what we can actually do, guys, just to make this as clear as possible for all of you? Let's break this down and identify this liquidity block to a T. Okay, so nobody is confused here. Once we trade below the lows to the left-hand side, price moves bullish. Okay, you can see here on a very, very small perspective, we induce higher, we take previous lows out, and price runs bullish, continuing up to the upside. Same thing occurs. Look, we take out highs, and then price sells off, grabs lows here, and then finally this last internal low right here, creating what's called a liquidity block. Now, how do I mark these areas out? All I do is I grab the last low just like this. So that last low being right here, and I put a blue box at the bottom of it, and I grab the whole swing low here, the whole liquidity block. That's it. And I make sure when I take my entries, which is basically going to be at the start of the blue box, I have to make sure my stop loss always covers this low to the left-hand side. Okay, so here we go. Entry just like this. Stop loss is going to be below the low to the left-hand side always, because remember the logic behind these lows. No liquidity. That's the entry. You guys already know from previous videos, the entries are repeatable. The entries are the same. Nothing ever changes. Now, for this specific model, what I'm talking about right now is the H4 candle. So we have just had a sell-off to the downside, clearing all of this internal liquidity. We have a bunch of highs intact to the upside. We want to target that. Those are our buy targets. Now that we've traded below H4 low, boom. Now the timing is on our side. We want to look for entries back up. That's what we usually call the 10 a.m. reversal. And typically we'll view this whole sell-off from high to low being false. So again, below H4 low. Now we want to look for that buy. We are in our buy entry here. Stop loss goes below the low to the left-hand side. Now the next reaction is pretty clean back up to the upside. Target-wise, you have the option of targeting the previous 4-hour high, okay, which is again very repeatable, very systematic, or you can just literally look for liquidity targets back up to the upside. So you have highs intact here, and again, we have the higher time frame highs intact as well. So if you want to keep it super systematic, all you need to do is once the 4-hour low is taken out, you look for your entry. Perfect. You're in your entry now. You can just target that H4 high. Again, very systematic, very repeatable. It's a stupid, simple, strict model that you can use on a daily basis. Right, guys? So again, H4 low goes, H4 high can be a target, or I'm giving you guys options here. Whatever you guys are comfortable with, you guys can target liquidity back up to the upside. And look at this reaction. We get entered in right at the low, and then the market starts moving bullish. Now, if we get reactions at the highs here, remember, and this is not new things in our previous videos, trap. Okay, first targets are hit. So there you go. There's that H4 high, an easy target for you guys. Simple and repeatable. We take out this high from the left-hand side. We're getting a little bit of a pullback right now. No worries at all, because we still have that higher time frame target intact. And check this out. And just like that, all targets are met. Now, after seeing this, let's head over to the 4-hour chart so you guys can make sense of what it looks like on just the 4-hour time frame. Let's clear some of these drawings. Just like we drew it out in the diagrams before, 4-hour low is taken. This is where you are looking for your longs right back up to the upside. And we have 4-hour high taken here. And of course, from a liquidity perspective, a liquidity standpoint, we have our targets being met on the left-hand side as well. Very, very clean. All right. If you guys enjoyed today's video, please remember, leave a like down below. It helps us help you. Leave a comment down below of maybe your favorite part in the video or future content ideas you guys want to see from us. Remember, I read each and every single comment. You guys know the drill. Trade safe, be safe. We'll talk soon.